What is going on, traders? John with Bull-Throttle Trading. And today I just wanted to make a video for a lot of you guys who are looking to become day traders and are hearing about what's called the PDT Rule. So today I just wanted to make a video explaining what the PDT Rule is and how you can adjust your trading skills in order to work with the PDT Rule if you fall under it, and basically help build yourself to getting above or exempt from the PDT Rule. Okay, so the PDT rule stands for pattern day trading, and what this means is a day trade is when you buy and sell a stock all within the same day between market hours. So let's say you decide you want to buy Netflix, and you buy Netflix, and let's say, all right, you get 10 shares, and Netflix ends up going up, let's say $2 or $3 from where you bought it at. So now you have a green number that, okay, I've earned this much money and I like this amount of money and I want to lock in those profits. So now I sell that position all within the same day. It could be within, a couple of minutes, a couple of hours, however. But if you buy a stock and sell it in the same day, that is considered a day trade. So the PDT rule is a rule that states that if you have less than $25,000 in your margin account, this means you have an account that, I'll get into, there's cash accounts, margin accounts, I'll get into that. But for a margin account, if you have less than $25,000 in that account, then you are limited to 3 day trades in a 5-day period. So a lot of people are under this PDT rule, especially starting out. If you're a new trader, you want to become a day trader, and let's say you only have maybe $1,000 to put into your account, you are going to be under the PDT rule. It does not matter which platform you go to. This is anywhere in the United States, any brokerage firm that you use, you have this PDT rule. So there's no way of getting around the PDT rule. Now, a little bit earlier I mentioned a cash account. So the way a cash account works, if you open a cash account with your brokerage, there is no PDT rule, meaning you are not limited to how many day trades you could make in any time period. However, the difference here is you have a cash account, meaning, okay, let's say I take a position and I take $100 and I invested in a stock, and the stock goes up to $110, and I decide, okay, I want to sell this position and lock in these profits. Okay, when I sell that position and I have a total of $110 that's now coming back into my account, that $110 will not settle in your account, meaning you will not be able to trade with this money for the day of your trade plus 2 more days. So using a cash account, if you have a large amount of money that you can put in there, you can kind of bend the rules a little bit. So let's say you have $5,000 in your account and you have a cash account, and you decide on Monday, I'm going to take a position. Okay, we know that we have 3 days that whatever position I take, it's going to settle in my account 3 days later. So we want to basically divide our total account into thirds. So let's make it $6,000 in our account just to make the math easier. Okay, so let's say on Monday you take 1/3 of that. So 1/3 of 6,000 is $2,000, and you take a position with that $2,000. And let's say you end up, it goes in the green for you, and you end up making $2,200, and you sell that position. And that $2,200 will now come back into your account, but you will not be able to use it until Wednesday. Okay, so now that's your first third that was eliminated on Monday. Okay, so now on Tuesday, you use another $2,000 from your account, and you take another position. And okay, whatever happens with that position, you sell that position, and now you get that amount of money back. And that amount of money will now come in on Thursday. So now here we go back on Wednesday, and now we could take that third $2,000 and go ahead and take another position. Okay, now when we sell that position and collect whatever money that we have, that money will now be in our account on Friday. So now when the day closes on Wednesday, our $2,200 that we had on Monday is now available when market closes on Wednesday. So Thursday, when you go to trade again, now you have your original $2,000 plus your $2,200 that you profited on that is now coming back in. So this is kind of a way that you can work with a cash account to use more than 3 day trades in 1 week. A lot of people find value in this. The issue with this is, let's say, again, you have $6,000 that you want to use as your position size. Using $6,000 is going to get you a higher return on, 5% versus using $2,000. So you are still kind of limiting your potential profits by doing this, but it is an option that you have. Another option that's out there is there are certain brokerages out there that offer cash settlement instantaneously. So basically, you would be opening up an account with a brokerage that, okay, now it is a cash account, but it offers instant settlement. I'm going to tell you that these are not free brokerages. The one that I tried out, it cost $1 every time I bought or sold, and it also costs $1 a month in order to have your account open with them. So I know a lot of you are thinking like, oh, okay, this is only $1, but if you make 20 trades that week, you've just spent $20 of your profits being able to have that right to trade. I've also found that these brokerages are also not the best at filling in orders. So this means that you might try to take a position, and by the time your order goes through, the stock price could have climbed, which would be eating into your profit margin, and basically you might end up entering your position when it no longer makes sense, or the risk to reward ratio is skewed against you. So these are things that you need to pay attention to and try to adapt. Most importantly, again, a lot of people always think, I need to get past this PDT rule. You need to earn that. And the reason why I say that is, let's think about this. If you are limited to only 3 day trades in a 5 day period, then you as a trader who wants to challenge yourself every day is going to make sure that, okay, if I'm going to use one of my 3 positions, I want to make sure that it's going to be a position where I have a great potential for a profit margin, and my risk on that opportunity is not more than 1 or 2%, whatever you decide for you that you're willing to risk when you take a position. So you're basically only going to be entering trades that you see a great potential for value in. And this is what you want to do as a trader, whether you're under the PDT rule or not. I have found in my own personal experiences, as well as I know many of others in the other stock groups that I'm members of, there is such a thing as overtrading. And as a day trader, the more times that you try to jump in on an opportunity, or like, oh, I see that this stock is now starting to go up and I want to be a part of this, you're going to see more days in the red than you are in the green. You want to really be patient. Wait for a stock to show you its whatever direction that it's going to move, and wait for these opportunities where, like I said, you have a low risk. So I know if my stop loss goes in, I'm only going to lose 1% and I have a potential for 7% profit. These are the trades that you want to take advantage of. Or it's not about quantity, it's about quality, especially if you're under the PDT rule. These are things that are going to help you make that $25,000 in your account faster and be able to get above that PDT rule. Think about it. If you're entering trades and you're trying to get past this PDT rule and you're not entering these trades that offer these value, and you're, okay, I'm jumping in on this, and okay, maybe you'll get lucky and you do end up in the green. But there's going to be more opportunities where you're jumping in on something because it's hype, or there's a lot of people talking about it, or it's moving, and then you buy in and now it starts to change direction. You don't want to be caught on that side of the line. And, all right, if you're over the PDT rule and you haven't really learned how to wait on these stocks, because the stock market can be very emotional. I mean, we all deal with that. It's your hard-earned money. So why would you want to be above the PDT rule and basically, okay, I have over $25,000 in my account, but I haven't learned how to grow my account being under the PDT rule? Then all that tells me is you're taking bad trades, and now you're going to be taking more bad trades with a higher amount of money, ultimately causing you to lose more money. So I understand that the PDT rule it definitely makes things difficult on you, but when you're beginning to learn how to trade, that's what you want to do. You want to challenge yourself every day and try to get better at finding these opportunities and being patient and not just jumping on board because somebody else is talking about it. Only invest in what you see value in. So being able to work with this PDT rule is going to challenge you to become a better trader overall. And that's what we want to do. I know everybody is joining this group and taking an interest in the stock market because they want to make money. And absolutely, I'm doing it as well. That's why I'm here. That's why I've done all the research that I'm doing. I want to be profitable on the stock market. However, if you cannot take the time to learn, that needs to be your focus. When you're starting, you're not trading to try to make money. You're trading to learn about these opportunities and being able to enter a position and watch it go up and know when to get out. Like, even taking positions, learning. I started out, I still use a paper trading account because I'm still learning. And this way it's not real money. The emotions are still there. I don't care what anybody tells you. I know it's not real money. It still feels good when you get a good trade. And even if you're under the PDT rule and you want to work on, okay, let's try to find these good opportunities, not making money. Buy one share of a stock. Try it out. If you see an opportunity and you're like, okay, I want to test myself. I don't care about how much money I'm going to make on this. I want to test myself and be able to see that, okay, I can enter this position. I can see its potential margin of profit, and I'm going to ride this stock and hit that margin. And this way, when you're learning, if you only buy one share and it doesn't go in your favor, you're not really losing a whole lot of money. So it's going to help you become a better trader and be more successful. That will ultimately help you make more money. If you come in as a beginner trying to make money, you are going to do what 90% of the population in the stock market does, and that is fail. You need to learn and take the time. So I hope that this video helped you guys get a better understanding of what the PDT rule is and the different options that you guys have in order to work around it or work with it and grow as traders. Please feel free to hit the like and subscribe button if you found any value in this video, and I'll catch you guys later. Thanks.